Chokkalingam as well joins in. Chokkalingam, hi, morning. The market's getting extremely tentative ahead of some very key data points to watch out for. Tuesday, you've got the Uttar Pradesh election results, you've got the RBI monetary policy as well, and then the big bank budget.
Well, all these three, I won't be surprised if they turn out to be a trigger for the market. If I talk about elections, of course, if there is a lot of confusion, it could impact the market only for a couple of days. I don't think that is going to crash the market because, again, this is an election for the state assembly, not for the Lok Sabha. And secondly, on the contrary, if the Samajwadi Party improves the tally, it could be a major trigger for the market because Mr. Akhilesh Yadav has already made a statement that if they form the government, they will work with the ruling party at the center and work for the reforms and growth. So that could be a major trigger. And also on RBI policy, I firmly believe that the reversal of monetary parameters has already started and the process would continue. And if you look at the credit growth number, which has come very poor, below 16%, and also the core sector growth is almost zero. So that would influence RBI to go for cutting of CRR and most likely even the benchmark repo rate. And third, on the budget, I firmly believe that this is the budget which is going to be pro-reform because next year budget would be targeted towards 2014 early Lok Sabha election. So therefore, all these three, I firmly believe that would act as a trigger for the market. I maintain the view that this year we will see the record high in Sensex and the Nifty before December. By any chance, any of these triggers turn out to be in a negative territory, there is a possibility of domestic institutions coming and rescuing the market because so far they have sold about 18,000 crore worth of shares. So if it falls, they would find it attractive. In case it rises, they will realize that they missed the bus. So either way, it's in a win-win situation, and I still remain very, very optimistic on the market.
Mr. Chokkalingam, let's then address all the issues which you've raised one by one. Do you think domestic institutional investors genuinely have money? Because whatever money LIC was sitting on, they've used it for ONGC FPO, they will be using their proceeds for BHEL FPO and for other government disinvestment programs. If you look at the data for mutual funds for this month, they've got net outflows. B, if you're confident that Government of India this time around will take some tough decisions in the budget, what makes you confident? Because at a time when crude prices are at $130 or $125 per barrel, they are not able to increase petrol price hikes also.
Well, to address the budget issue, oil is of concern. If oil spikes further and stays at elevated level, yes, we'll have a lesser job to do. I don't deny that. But I only wanted to tell you that, when the Western world is growing at 1.5% and even the China and India have seen more than 100 basis point correction in the growth, there is a likelihood of moderation in the oil price. And this kind of volatility in oil price we have seen again and again. Even last year, 2011 early, we have seen oil on boil and, a lot of people getting scared, and then we saw the moderation in the oil price. So therefore, I firmly believe that at least for next 6 months to 1 year, the oil price is unlikely to spike. But of course, one has to remain alerted. And on budget also, if you look at, what has happened is that the continuous tightening of the benchmark to the extent of 375 basis point has brought down the industrial growth. And industrial growth plays a major role for fiscal revenues of the central government. Now, that is highly correlated with the reversal of benchmark interest rates. If you see the reversal of interest rate, obviously the industry will start picking up the growth momentum in profits. Let us not forget the fact that the industry sector has posted already 25% year-on-year growth in the sales for December quarter. So, it is very sensitive to the interest cost. And the moment you see the reversal, their earnings will improve. The tax collections would also improve going forward. On third issue, domestic institutions, according to me, the problem is particularly with the mutual funds, the lack of confidence among the retail investors. And we have seen in two areas, in MCX issue, when the issue size was 660 crore, the company could mobilize 35,000 crore in no time. It surprised many of us. So once the confidence keeps growing, the retail investors would come back and they would pour in money into the mutual fund. Same is case with the FIIs. Let us look at the HDFC issue. Even when the news came before they could unlock the shares, we were a bit worried. But the way the HDFC shares were absorbed by the FIIs in a single day, that gives us a lot of confidence. And also on LIC. LIC is sitting on a huge kitty. I don't think LIC has exhausted the kitty meant for the equity in their total investment pool. There is still a lot of room left for LIC. And so therefore, I still remain very positive. I don't get scared about the current developments.